Dads all around the nation are rejoicing this week as Weber Grills hits the public markets. The company was founded back in 1952, has $380 million cash on hand, and is likely going to be valued at over $5 billion. In this video, we break down not only the bull and the bear case for the equity, we compare it to a bevy of different companies and break down how their wide array of product lines might give them an upper hand in hot grill summer.
I'm Hannah, this is Aaron.
Hey, how are you?
And you're watching the Piper Rundown, where we analyze business and culture to help you win. Today's rundown is presented by JetStore. JetStore has been providing affordable, reliable, and easy to manage data storage and cloud solutions to more than 4,000 customers worldwide for over 26 years. And just for context, that's longer than I've been alive. So they can handle hella storage. Shout out to JetStore. Make sure you stick around till later in the video, where you can hear about all of the different ways that they can help you with your data storage.
Our sponsor, JetStore, is older than Hannah, and the company that we're breaking down today is older than Hannah's parents.
Oh!
To contextualize a little bit, Weber has been making grills since 1952. Before that, they incorporated as Weber Metalworks, doing a wide bevy of metalworking solutions, but their grills started selling so well that they decided to cut bait, put that company aside, and exclusively focus on delivering people grills, and they've been doing so for more than half a century.
Super impressive.
So it's quite a treat that they are hitting the public markets, raising $916 million, and going to have a valuation north of $5 billion. Based out of Chicago, Illinois. Technically it's Palatine, Illinois, but it's the greater Chicago area. Let's not get too technical here. I'm not a geographer. It was a family business for 100 years, going back to the metalworking days. And in 2010, they sold a majority stake to BDT Capital Partners. So that's why this very old company with a rich family history and heritage is hitting the public markets, because the way private equity firms work is they usually have some sort of window by which they need to have liquidity on the investment that they made. And in this instance, the way they're doing that is through a public offering. That public offering is for a company with a very wide range of products. The cheapest grill that Weber will sell, only $38. The most expensive, more than $3,800. All sorts of different kinds. Gas, electric, charcoal, and pellet grills like Traeger, which we just covered in the last video on Friday.
Weber is the undisputed leader in grills.
Their most popular selling grill is the Genesis model. The Mac Daddy, they're on into a multi-generation of the Genesis model, but you've probably seen it if you ever walked through a Home Depot or a Lowe's or a Walmart or even Costco. They have all the retail distribution relationships, which is why they are not only a company that does a substantial amount of revenue, but one that is profitable in doing so. In 2018, they did $1.34 billion worth of revenue. Slight dip in 2019 down to $1.29 billion, and then all the way up to $1.52 billion in 2020. It is hot grill summer.
It really is hot grill summer. When is that? I guess this is the last grilling IPO we're doing.
No, Solo is reportedly in talks. We may have another one before the end of the year.
Oh my God. Well, it might not be summer at that point.
Well, they will have been riding the wave of a hot grill summer.
Well, I guess we're gonna just...
It's always summer somewhere. Like Jimmy Buffett's always 5 o'clock somewhere. It's always summer somewhere.
So we're gonna ride that
You ever
out
chase
as long
summer?
as we can.
You ever chase summer before?
All right, that's fair.
Not only are they racking all that revenue, not only are we digressing wildly because we're tenuously gripping to reality, but they're also able to do it profitably because of those retail partners. $113 million worth of net income profit 2018. $50 million in 2019 and $88 million in 2020. Part of the reason that's dropping is they are substantially increasing the rate of sales and marketing investment that they are making. They do see Traeger and some of the other companies entering the market add some competition. They want to continue to establish their brand name and start to make a pivot towards direct to consumer sales through their website, through other channels, in addition to those retail partners. They've been able to do it relatively successfully, but the other big thing, exactly like the Traeger video, is they are riding a wave of grill interest generally. For the last 5 years, the market for grills has grown at approximately 3% CAGR. You sometimes see the acronym CAGR, which is the compound annual growth rate for the entire industry. That is projected to be as high as 4.5% in the coming 5 years because the pandemic has taught a lot of people, man, I need my home to have all my amenities. If I'm completely relying upon going out and about for entertainment, for food, for my needs, the next time that there's some sort of sweeping lockdown, I'm not gonna be able to get any of that stuff.
Got to be equipped with your grill. Cool. Well, let's take a look at some of the comps to Weber. One of them may be super familiar if you saw our Traeger IPO video last week.
Traeger did have a successful IPO. They hit a $2.6 billion market cap, a slight pop from the initial pricing of the model. I also want to direct you, we compared Traeger. Do you remember who we compared Traeger to?
Oh man, I wish my brain was working. But, oh yeah, the Peloton, that's right.
Right, because Traeger was this very high-end luxury model, digital tools, very kind of specialized for a certain at-home experience.
Definitely.
The reality is that you can get all the component parts of a Peloton shipped to you in another product, the Nordic Track, for a substantially lower price with basically all the same bells and whistles. You're just not going to have the status symbol of your Peloton. The same is true in the grill. If Traeger is the Peloton, then Weber is the iFit, the holding company that not only makes Nordic Track, but a bevy of other fitness brands that you may or may not be familiar with. Not the same status symbol, and some people may be scared off of Weber on that basis. They may say, well, Aaron, Peloton's the one that popped. Peloton's the one that has some crazy multiple on revenue for their entire market cap and valuation. That might be the reality in the short term. We will see if that remains a reality in the longer term. Additionally, I don't think I don't think grills generally quite have the same sex appeal as Peloton, but I could be wrong.
No.
Also, the Clorox company, we talked about them before, selling the Kingsford charcoal, just to contextualize charcoal in the landscape of other grilling apparatus. Home Depot is one of their primary distributors, one of their primary retailers. Home Depot actually has the third search result when you search for a Weber grill.
Interesting.
$348 billion market cap for that company. They obviously sell a lot, but important to contextualize where those companies are in the landscape. And then I want to point you towards 3 other outdoorsy folks getting kind of more inclined to either get outdoors or be adventurous with their own type of gear companies that are actually decent proxies for Weber, I would argue.
Okay.
First is Yeti.
Oh, okay.
Which is an $8.4 billion market cap company, mostly for thermoses, coolers, other associated items. You've got Thor Industries, $6.5 billion market cap. And Newell Brands, which is the maker of Rubbermaid, $10.5 billion market cap. Those are not necessarily competitors with Weber, but they're in a similar type of space, and so goes the household goods industries, so goes all these companies.
Yeah, sweet. Let's move on to the meme factor, a segment in which we rate the memeability of a company on a scale from 1 to 5. 1, there might be some negative narratives surrounding the company despite it being a good business. 3 is completely neutral, and 5, super memeable. Think Elon Musk and Tesla. Aaron, what is your meme factor for Weber grills?
Hannah, I think we're guilty of something.
Oh no. What are we guilty of?
I think we're guilty of having a decidedly youthful perspective on these companies, not as children, but as relatively young adults in the spectrum of adults that are out there.
Okay.
I would argue that Weber, while not meaning anything to a majority of people under the age of 32, is a trusted, legitimate, highly respected brand.
Definitely.
For the dads and the granddads out there, given their history in the grill game. And so, some of those dads may have also gotten smitten with the Traeger. But the fact that Weber is trusted by dads, and I'm not saying that the moms can't be cooking on the grill, that's not the point that I'm making, please. I'm not a misogynist.
No, we know this, Aaron.
I'm just saying that the meme of the dad by the grill, holding a beer,
With his
yelling
cargo
at the
shorts.
kids, wearing New Balances. I'm trending that direction, folks. I'm eyes wide open walking into that reality. It means something to them.
It does.
And those are also the characters that tend to, not always, but tend to be the investors, be the capital allocators.
If we just described you, leave a comment, let us know.
Send us your favorite story about grilling with your family in the comments.
Please do. Tell us what's the best thing that you grill up in the summer.
A little chorizo. You can get a little chorizo on there.
Jesus.
So I'm giving it a 3.7. Higher than I anticipated. Still not super high because, you know,
What did you give Traeger?
I don't remember. I think it was like a 4.1 hot girl summer.
Yeah, hot girl summer. Yeah, I think I'm going higher than 3.7 just because of the entire backstory we painted for Weber grills. Yeah, it was. I'm gonna go 3.9. Not quite in the 4 territory because it's a grill, and let's just not get too excited.
Damn.
Well, before we get to the bull and the bear case, let's talk about JetStore for a hot second. One of the things that they specialize in is data archiving for all of your data storage needs. We took a tour of the JetStore office when you interviewed the founder on the Going Deep with Aaron Watson show, and so we saw this stack of hard drives and disks and just storage facilities that they have that had enough space to store an entire Hollywood film on it.
And they have been doing that, and it's, you know, it keeps it secure, because that's the other consideration. You don't want to lose your footage, you don't want it to be corrupted. It is highly precious because of what goes into those shoots.
Yes.
And their shit is trusted by Hollywood studios.
It's wildly impressive, and they've been doing it again for more than 26 years. They're the real deal. Thank you again to JetStore for sponsoring the rundown. On to the bull and the bear case.
Bull case, very simple. There is a robust line of products that makes up the Weber grill SKUs. They have more than Traeger, they have more than anyone else. They've been doing it for the longest time. They have some of the best embedded designs of grills, patented, filed away, that they can pump out at scale because of their manufacturing capacities.
Yeah.
I love to bet on the companies with a legitimate edge in infrastructure, and that is something that Weber has. Secondly, rising tide lifts all boats. When the compound annual growth rate of your industry goes up by 25%, 3 to 4.5%, that's what I'm saying there. I guess that's more than, that's 33%. Shit, I'm not good at math. Let me know in the comments what you mean. When it goes up substantially and you are one of, if not the leading brands in your space, you are going to be elevated without really doing much. It's not a lot of credit necessarily to like some specific strategic decision. You got the relationships with all the major retailers, you have the brand equity, you have the line of products that meets almost any need, from the first time grill buyer to the person that is tricking out their dream home. And you're positioned to be their partner.
They touch every base.
And finally, the channel partners and the associated brand equity, not as strong as Dole, which we're covering in the next video, but a substantial brand to a lot of people, and one that is trusted by the biggest retailers who don't want to be selling shoddy products and have been delivering Weber grills for a considerable amount of time and ridden their own growth behind the Weber brand.
So would you say you're generally bullish on Weber?
I am generally bullish, but there's a couple things on the bear side that need to be pointed out. Number one, there is zero founder DNA remaining in this company. Traeger, which has been, bought by the guy that started Skull Candy. He wasn't the inventor, so to speak, and they have their own issues with the founder, Joe Traeger, partnering with another company. But there is no founder DNA left. This is the large corporate entity that is going to be somewhat mechanical in the way that they proceed forward. So you're not getting anything like that. And this is a narrative where there may be a rising tide in the industry, but this is at best a double. This is a single or a double type of investment. There's no memification behind there that's actually going to go absolutely crazy, because those dads are not the crazy retail traders of Robinhood. They are not the crazy, hedgies that are triple, quadruple leveraging up to pump one of these things up. This is likely a single or a double, unless something way beyond the bounds of my comprehension happens in Wall Street bets. And finally, there is a risk of channel conflict. The newer brands, the e-commerce brands, do benefit from the fact that they can build D2C directly into their DNA. at the same time as them having those great partners in Lowe's, Costco, and Home Depot, them going direct to consumer is going to be something that all of those retailers will not be thrilled about. And should that channel conflict come into play, there could be a potential slight inhibition to their overall sales.
Yeah, that's fair. Cool. Well, that's the rundown. Thank you for watching. We appreciate your viewership. You might have heard, but we are on a mission to reach 10,000 subscribers by the end of the year. We are already pretty much on track for that, and we appreciate you liking, subscribing. Please share this video with a friend, with a dad who grills.
You know a dad?
If you know a dad, let him know about this IPO.
Shout out to dads. It's not even Father's Day, but shout out to dads.
Shout out to dads. Cool. We would also like to read a comment from a viewer. Zulay Pichardo commented on our morning brew video. Surprised this doesn't have more likes and views. Great video. Thank you for the info. Thank you for watching, Zulay. We appreciate you watching our content and going back to an older video that we have on the channel.
Well, Morning Brew's growing, and that is a video where we spent more time going deeper in the research, interviewing actual members of the team to get a comprehensive picture of where that company might be going, despite the fact that it's still private. If that's the type of thing that you're into and you don't just want IPO videos, we need to know. Yeah. Clearly that Morning Brew video is working.
It's doing pretty well.
But you know, our main goal is to hit the 10,000 subs.
Yep.
And if that's something that you think will help us do it, if that's something that you would love to see, there's a specific company that you would want us to break down. The comments are the best place for us to learn that. We'd love to see those comments. We read every single one, even the mean ones, which are not very nice. Stop those. Be nice.
Be nice. That's the rundown.